Welcome back, everyone, to the Permeable Challenge. I haven't called it that in a few weeks because it's been feeling, well, different. Different sectors, different. You can always be bullish about something, I suppose. But anyway, welcome back to week 32, week where gold knocks its head and uranium ticks up for the first time in a long time. Okay, so what happened this past week? Well, it was a bit of a interesting week all around markets. The bond market is continuously screaming either for or that there's going to be a rate cut sooner and sooner and more of them. And presumably it's doing this because it sees economic weakness, economic deterioration. On the other hand, the equity market seems to be seeing that the bond market is telling them that the Fed is going to cut rates, and obviously they're less concerned about the economy and more excited for easy money. And on the same theme of rate cuts and things that affects, gold has once again moved up and bumped up against the 1350 resistance. Now, I don't know what's going to happen. I lean towards agreeing with the bond market that the rates are going to be cut, if possibly, if only because the bond market says they will be. But eventually, I think they will. I don't know when, but I would have to say it would look pretty bad. And I don't know if it's the right move to cut rates or not, but it would look pretty bad to start cutting rates to ease or, well, to support the stock market, especially if they go back to QE, buying up stocks or buying up bonds to inflate asset prices with stocks basically at all-time highs. I don't think that that's what they want it to look like they're doing. Now, that being said, it's what it looks like they're going to be doing. But I don't know. I don't think it looks that good. Now, as far as the commodities go, oil and copper have retreated along with the bond markets calling for cuts in terms of economic fears. And then they bounced this week, actually. They bounced, I guess, probably with the weakening of the dollar, although I didn't look to see if that correlation is exact. Oil and copper both bounced, as well as gold, but gold, well, maybe moved up slightly stronger. And uranium, after sliding for a long time, ticked higher for the first time in a while. I don't know if that's potentially someone moving in to buy a little and thinking, well, there's only, what is it, 30, 35 days or so before 232 needs a resolution. Maybe someone wants to get buying in thinking that once it resolves, it'll be faster. Maybe not. Who knows? I know I don't really care. I think that it's probably better if it stays lower for longer. I mean, the fundamentals improve. I don't know what happens to the equity price if it moves up, but it doesn't really matter. Fundamentals lower for longer. Pushing it up into the 30 range doesn't really help most players. Helps maybe one or two. And aside from that, the other thing I wanted to say about gold was simply that I believe longer term it's going higher. But with setups like this, with it moving up and bouncing or moving up and hitting resistance, I have learned this is not the time mathematically where I want to be stepping in and buying more. Now, I'm not selling any. Maybe I should trim a little, but I'm not. But mathematically, this isn't where I want to be buying because I think that the next $30 to the upside will not be easy. Maybe I'm wrong, but there's a lot of technical levels going higher that we'll have to fight through. And once it gets past that, maybe it rips, maybe maybe not. But it also has just come to the end of a rather startling, rather quick move, big move to the upside. And here I'm not adding this week. Now this brings us to the picks of the week. Now, two of the picks this week, including one new one that I'll get to next, are uranium equities that I believe have strategic value within the uranium sector. One of which is Bannerman, um, which is a rather large project in a strategic location, but it's also a sizable project. And I look at the sector and I look at the options out there and I look at a lot of the possibilities. And I believe that the size of this project, for multiple reasons, and its location, but mainly I'm talking about the size, has strategic value as it is one of a few projects that if the cycle goes a particular way and it goes poorly at a certain flow of events, it could be the ender of the cycle. And it's big enough to possibly reverse the cycle. Again, for a while, if, which there's too many ifs to get into. But for that reason, and for the reason that it's a higher cost project, but it has that potential, I think it might actually be valued at a premium to its NAV, being net asset value, for potentially some other player. But either way, at these prices, and I believe Bannerman has a lot of potential upside, so it doesn't need to be necessarily taken out. I believe likely there's a scenario that I see where it just produces a lot of uranium and a lot of money. And the other such project, and I didn't really want to add too many more uranium equities. At this point, the portfolio has so many of them that I didn't really want to add more. But the next one is NexGen. It is, yes, I'm finally biting the bullet on this one, and it's an interesting one because I believe that its size and its location, well, mainly its size here, makes it a strategic asset in that I think it's probably worth more than its NAV to Cameco in some situations. In that, well, or to some player, maybe not Cameco, but like this is the type of thing that again, if the cycle is within a certain range of outcomes, this could be the end if it gets that long, but I don't know. Similarly, I believe that if you look at how long it takes to permit a uranium mill in Canada, the last two mills took about 6 years each once the process started. NexGen has not yet started the process. Maybe they start it next year if everything's on target. Then you add 6 years, and then you add 3 more years for construction. At that point, 2028 would be a pretty optimistic target. Now, this would be, let's call it, in time to replace Cigar Lake. On the flip side, it is also entirely possible that maybe it comes into production sooner than anyone thinks. If it does that, if by some miracle they manage to get permitted very quickly, well then this is the type of thing that could, for a significant period of time, cut out some of the higher out of the money deposits, of which there are a few in this portfolio, like Bannerman and our last pick of the week, which is Goviex. I'm sure many of you know about Goviex. But either way, the African deposits mostly are higher cost. They're very closer to production. But if the price stays lower for a while, and as I mentioned before, if by some really change in pace, NexGen permits exceptionally quickly, then these are the things that would be at risk if some big supply were to step in, and that explains my thought process this week, I guess we'll just say. Looking for mostly cheap pounds, and the African two stocks that I picked this week are cheap pounds. And then there's NexGen, which is not the cheapest of pounds, one of the more expensive per pound plays, but I think that it's basically a hedge in a weird way. And here's a look at the updated portfolio, and I know, well, many of you are probably glad that it's uranium centric and has been for a few weeks. Some of you may not be. And I I'm focused on uranium now because I'm not I think it's more time sensitive than a few other things. Um, and I do have mentioned early in the video why, kind of economically, I'm looking more so at uranium than other sectors. However, if you do want my thoughts or an update on some of the other sectors that I've talked about, please feel free to let me know, or if you want something specific in the next one of these series of videos, please let me know in the comments and I'll try to address what I can where I can. And aside from that, I hope everyone enjoyed a few thoughts here and wish everyone a great week. And I'll catch you next time. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.